Hello and welcome. You're watching Buy Now, Sell Now on ET Now. I'm Shruti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we'll connect with our experts as well. But before we start taking your queries, let's have a look at what the markets are up to. So Cheryl, feels like Monday blues in the markets as well. Not much an excitement since the start, but we have drifted lower from the day's highest point.
Absolutely. A very good morning to you, Shrishti. A brand new week coming in and markets are doing absolutely nothing in this brand new week. Like Shrishti mentioned, we are off the day's highest point, but nevertheless, we are holding on to some positive bias when it comes to Nifty, but we are below 18,700 mark. Talking about Nifty Bank, it is moving in tandem with the benchmark indices, trading flat as flat can be right now. But yes, it is trying to make a move up from the day's lowest point. Talking about the list of gainers and the losers in trade today. So you have Adani Enterprises, Tata Consumer, Cipla, UPL, all of them gaining in trade. Add to that list as well M&M, that are seeing an uptick of approximately 1.5%. But on the flip side, you have TCS as the top loser on the Nifty, 1% downtick coming for TCS, followed by Tata Steel, Power Grid, BPCL, as well as Coal India are the other set of losers. As of the advanced decline ratio, for now, it looks neck to neck. Let's shift focus and let's talk about the sectoral indices and what the sectors are doing at this point in time. And you have the Realty Index, that's the top sectoral loser, 0.5% downtick coming in for the Realty Index, followed by PSU Bank, Infra are the other set of losers, while on the flip side is the Pharma Index that's holding on to good gains along with Auto Index. You have Pharma Index that's trading high of about 0.9%. You have Auto Index also that's seeing gains of about 0.7% as we speak. And you have broader markets that continue to outperform in today's trading session. They are actually holding on to positive side and also inching towards the day's highest point. So that's the way how the markets are looking like today, Shrishti. Yes, flat for the benchmarks, but broader markets outperform once again.
Well, yes, broader markets are seen to be outperforming yet again. And today onto the Buy Now, Sell Now lens, we're going to be focusing on this particular space itself. And as we get a lot of queries from our viewers where they are keen to invest into all these mid caps and the small caps names. So onto the show today, we'll try to find out the top bets and the top recommendations coming in from experts from these pockets. Let's try and understand that. And before that, let me welcome on board two of our special guests onto the show. We have Kunal with us to help us guide onto the technical front, as well as we have Ashish Maheshwari from Blue Ocean Strategic Advisors. A very good morning to both of you. Kunal, firstly, let me come to you because in the past we have seen you picking a lot of, I would say, multi-baggers when it comes to the mid-cap and the small-cap space. At this point, where are you eyeing and which stocks are on your radar?
Good morning, Srishti. So two buy calls which I would suggest at current levels, and both of them are from, of course, different sectors, but again mid-cap oriented. The first one is a buy on Ujjivan. Now, Ujjivan is a stock which has done exceptionally well over the last 1 to 2 months. It's risen up to almost 400 approximately odd mark. But I believe from the mid-cap arena, this looks attractive. It's come back towards the 20-day moving average. So I think at 385, 86 levels, I would look out for a target closer to 425 for Ujjivan, and traders who have a slightly higher time frame can look out for much higher targets beyond those 425 levels, and stop loss could be kept at 366 mark. The second is a buy on Motherson or Samvardhana Motherson. We identified the stock I think around 65, 67 mark, and from there it's moved on to that 80 plus levels. It's still looking very attractive, pattern of higher highs and higher lows being consistently observed for Samvardhana Motherson. So would recommend a buy even at current levels for a potential target of 90 plus, stop loss at 80.
Okay. These are your topics when it comes to the broader markets. But if you have to analyze the broader markets as your mid-cap as well as small-cap index, do you think some more steam is left for the rally to continue in both of these spaces? Because we know the mid-cap is at record high, know that small-cap is at 52-week high levels, and they are outperforming the benchmark indices day after day. And in such a scenario, investors are bound to try and pick mid-cap counters to get easy returns, isn't it?
Well, first of all, Cheryl, I think one thing is clear that you have to understand why the mid caps are outperforming the large caps. It's because the sentiment has started to become bullish for the Indian markets or Indian indices, and I think that's one of the major reasons why you're seeing the mid caps outperform. And that's where higher alpha gets generated. We've seen that historically for every period of a bull market or a bull trend, whether it's a bull market which lasts for just about 6 months or 1 year, or whether it's a bull market which lasts for many years, the mid caps they tend to outperform significantly as compared to the other larger cap peers. But then there are bound to be phases where the mid caps would get into a period of overbought nature, like what we've seen in the last 2-3 days. I think that's where you're seeing a correction. Try and take advantage of this correction is what I would advise for long-term investors, because if you have quality stocks, even in the mid cap portfolio, and if you tend to ride the trend, the return potential could be significant from a long-term play.
Okay, so that's the view coming in on mid-cap space. But Ashish, very good morning to you. Tell us, what is your view coming in at this point in time onto the broader markets? Are they expected to outperform for the rest of the year as well as amongst the space, which stocks are you eyeing at?
Yes, I also echo the same view that as FIs are back in market, so Indian markets are, particularly equity markets, are bound to do well, first of all. Second, as company-specific fundamentals are quite robust. Most of the buying is happening now when very selected companies, not a very broader market. Because if you see the performance between the Nifty mid-cap indices with Nifty 500 indices, Nifty mid-cap indices has gone up by almost 32% in the last 1 year compared to Nifty 500 just moved up by 18%. So it shows that in selected mid-cap pockets, a lot of action is there and is bound to remain because company-specific action or company-specific fundamentals are getting strengthened. Another thing which has happened in mid-cap companies in last couple of years, when the commodity cycle was booming, these companies have made a lot of money. So companies in chemical space, companies in textile, or companies in defense, railways, infrastructure have really curtailed down their debt significantly and expanded their business. So fruits will come in coming years. So as far as my couple of picks are concerned in mid-cap space, my first pick is again in defense. This company is Zen Technologies Limited. If you see the performance, in 22 they reported a profit just 2 crore. This year they did 49 crore. I'm expecting almost 100 crore profit in this year and another 150 to 175 crore profit in next year. Because the size of orders which are coming in the defense sector, whatever the order book they were having the previous year, that much order they have already received, and another 500 crore worth of order I'm expecting in next 1 month in Zen Technologies. So Zen Technologies is my pick number 1 in mid-cap space with a price target of 500 in next 6 months. Another stock which I like is in recreation space, that is Wonderla Holdings Limited. Again, this is a company which runs amusement park and resort, and they are also in the expansion spree. Their Odisha park will be operational in the next couple of years. Chennai project is on way now. A debt-free company with almost 200 crore worth of free cash flow being generated every year. 150 crore was their profit in previous year. I think this is a stock which need attention because available at just 18 price earning multiple from FY25 earnings. So this reason I've selected in my buying bucket.
So those are the top picks coming in from Ashish for all of our viewers. And let me recap both the top picks coming in from both of our experts. For Kunal, it's Ujjivan and Samil, while for Ashish, the top mid-cap bets are Zen Technologies as well as Wonderla. So those are the top picks coming in right at the top of the show. So yes, viewers, you can ask some other query apart from these mid-cap stock ideas that you ask for. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get your answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that's flashing on the top of the screen. Do remember to mention your name, the stock that you're looking to invest in. If you're already invested in it, then do mention the buy price, the quantity, as well as the time horizon, because that will help our experts help you better. And with that, let me bring on board our experts once again. We have Kunal Botra as well as Ashish Maheshwari on the show today. Once again, good morning to both of you. And let's kickstart with the queries then. And the first one that I have is coming in from Arvind Reddy. And he wants to know if we can start an SIP in Voltas for 2 to 3 years. And if possible, also he wants to know about Kalyan Jewelers. He has 150 shares of 106 rupees per share. He's saying he can hold for the long term. Should he stay put with it or look to book profit and exit? So first is Voltas. Ashish, do you think that makes sense to start and sip in this one for the next 2 to 3 years? And also Kalyan Jewelers, what should Arvind do with his holdings? Ashish, you'll have to unmute.
Sorry. I think Voltas is not a stock to do any SIP kind of thing. SIP you do where you see consistent growth, good set of numbers, etc. But Voltas has failed to deliver any, those things. Growth is not forthcoming. Numbers are pretty bad, and we have seen stock is at near 52-week low. So my suggestion is instead of Voltas, if you want to do SIP, do in this new listing of IQ Lighting, which has recently got listed and just available at 3,500 crore market cap. And lighting is a business which will really do well in next few years because of China plus one policy. Now, a lot of countries are looking for importing their lighting from Indian side, and there is various government schemes also for this. So IQ Lighting is a better bet, in my view, in next 3 years compared to Voltas. As far as Kalyan Jewelers is concerned, again, this is a stock I'm not that bullish because if you see, other than Titan, all jewelry stocks have not delivered or given a very moderate kind of return. Those stock, Kalyan Jewelers, have recently performed some gains, but I don't think so. These are sustainable. And my suggestion will be, if you want to remain in the sector, it's only Titan.
Okay, so that's the view coming in on both of these counters. Instead of Voltas, you can look at IQ Lighting, and Ashish also compared Kalyan Jewelers as well as Titans. But moving on, but before taking the next query, a short reminder to all of you that the only way to connect with us is through the chat option of WhatsApp. If you will ever call to us or give us a video or a voice call, we won't be taking that. So you can write to us on a WhatsApp number that is flashing on the top of your screen. And going ahead with the second query, Kunal, coming to you for this one. Anjali wants to know, is this a good time to buy two large cap banking names, Axis Bank and IndusInd Bank? And what's your view going ahead?
Yeah, I think both of them have done reasonably well, but I believe that maybe buying Axis Bank as well as IndusInd Bank, you can also look to add HDFC Bank at current levels because, I think HDFC Twins seems to have gotten to a bit of a bottom formation process. Maybe another 1 week of time-wise correction, but these stocks could probably be at a cusp of a strong reversal on the upside for themselves. So would be bullish on the banking stocks. I think Axis Bank and IndusInd Bank could be two names, but you can also consider looking to invest into HDFC Bank.
All right, this next one is coming from V. Mathur, who is a senior citizen, writing to us from Delhi. And this one is for you, Ashish. She's already holding two counters. One is Asian Paints, 90 shares at a price of 3,183 rupees per share, and Escorts Kubota, about 245 shares at a price of 882 rupees per share. Wants to know what should he do with both of the counters. He has a 3-year horizon or so in both of this. If you look at both of these counters, good profits is what he's making.
Yeah, and both are typically blue chip kind of stocks. And after announcement of last quarterly numbers, in fact, both Asian Paints and Escorts both have really moved up. And they are both in exciting sectors. They are almost market leader. Escort, particularly in tractor in Northern India, Asian Paint overall in decorative paint side. And the way now real estate construction is happening pan India, I don't think so. There's any looking back now for Asian Paint as such. I'm expecting it will be crossing its 52 mark of 3,600 also once this quarter number comes. As far as escorts is concerned, they are also able to perform. And in automobile sector, we have seen almost all stocks are doing well. And escorts is again a stock which can deliver very good set of numbers. Again, monsoon is also coming 10-15 days delayed, but it has finally come, which will be again a shot in the arm in companies like escorts. So both are hold in my view. Escorts, my target price is 2,500 next 6 months.
Okay, moving on, and Ashish, coming to you for next one as well, because this question is on ICICI Securities. That's the newsmaker for today. That is up around 15%. And Rajesh Maheshwari from Singapore is holding 200 shares at a price of 521. Going ahead on 29th of June, the board will consider to delist the shares. And what we are getting from to understand from sources is that all the shareholders ICICI Securities will indeed get shares of ICICI Bank. So what's your view coming in on ICICI Securities, and what should Rajesh do at this point?
See, the stock has moved quite a bit. If you see from 550 odd levels we have seen in the last couple of days only, stock has moved very handsomely. And today also stock is up by 60 odd rupees. So if you ask me, the time to book profit and ICICI Securities, because ICICI Bank related stock like you can always buy from the market, but there will be some uncertainty related to swap ratio and all those things. But as stock has really performed in last few days, profit taking is bound to come. So my session will be to book profit once.
Okay, fine. This one is coming in from Preeta Roy, writing to us from Kolkata. Kunal, this one is for you. Spark is the counter that she's got, 120 shares at a price of around 209.35 rupees per share. Wants to know whether to stay put with Spark or look to exit this particular counter. Her time horizon is 1 to 2 months. And if you look at the stock right now, it's not moved anywhere in either of the direction from her buy price.
Well, yeah, and I think for the next 1 to 2 months, I don't sense anything, I would say critical for the stock to try and move up or show signs of, major reversal, because even if you look at the last 4, 5, 6 months of chart patterns from 2022 and highs for Spark from 260 levels towards right now, the stock has been consistently making lower highs for itself. The only solace is that today's price action is on the back of the very strong volumes for Spark, which means that possibly the next 1 or 2 days you might see the stock going into a follow-through up move. But I think breaking past about 250, 260 levels is where the bigger breakout could happen for Spark. So since your time frame is the next 1 to 2 months, I would believe that any rally you get towards the stock, maybe around 220 odd mark, 225 odd range, could be a good zone where you can look to book out profits.
Okay, moving on, and Ashish, coming to you for this one. This question is from Bhagwan from Mumbai, and he wants to know advice on 2 counters, Navbharat Ventures as well as Lakshmi Organics. Can he buy any of these names at this point?
No, I'm not that bullish on both the counters, either Navbharat Ventures as well as Lakshmi Organics. I think these 2 counters were really underperformer for quite some time, and they will continue to remain so because a lot of people have struck up at a higher price in particularly Lakshmi Organics. So as far as chemical stocks are concerned, in my view, instead of Lakshmi Organics, Tattva Chintan is holding much more merit, along with Aarti drugs can be also looked at this price point. As far as Navbharat Ventures is concerned, I don't think so anything happening there. So you can sell both of this or even don't buy.
Okay, this one is coming from Madhvan, writing to us from Coimbatore, and he has a Morphine Labs, about 329 shares at the price of 29 rupees per share. Wants to know about the future of this particular counter. Do you think that this stock merits to be in a portfolio? Ashish, what sort of outlook do you have on this one, and what should Madhvan do with his holding?
So Morphine is again a kind of a stock which is very quite seasonal, like where most of the drugs are for seasonal flu and all those stuff. So this is a stock which has also not given that good return and very volatile also. So instead of this, I'll suggest you can look at the Marksans Pharma, which looks much better, much a stable company at this price point and below 100 rupees range also. So buy Marksans.
So that's the advice coming in. But with this, viewers, it's time to step into a short break. But don't go anywhere. We'll be right back in order to take more of your stock-related queries. So stay tuned. Welcome back. Watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. And continuing the same, Kunal, coming to you for next one. The question is from Ayush, and he has shared a bit of a longish list, and he wants you to pick any of the two names from the list. He wants to make a fresh investment either amongst KNR Constructions, PNC Infra, as well as Praj Industries. Amongst these, any of the names that you like, and also between Gujarat Fluorochemicals and SRF, which one would you recommend?
So I'll take it step by step. From the first part, I think Praj Industries as well as PNC Infra, both of them, they are looking a tad bit better in terms of the chart formation. I think both of them are forming or coming out of their respective consolidations. Praj Industries has not yet come out of a major consolidation, but I believe that with the fact that the stock has rallied from 60 rupees to 400 plus and then 400 to 375 where it's trading right now, it's taken almost more than 18 to 19 months for the stock to consolidate, indicates that maybe the time-wise correction could probably be over for Praj Industries and the stock could be ready for a breakout. So out of the first list, I think Praj Industries as well as PNC Infra look attractive. From the second list, I think Gujarat Fluoro could be something which you can still consider as a buy. The only catch over here is that I think it's a very high beta stock. It has a very odd tendency of coming closer to its 200-day moving average every now and then after a rally of more than 20-30%. So we've seen that happening for Gujarat Fluoro so many times over the last 2 to 3 years. So that's the only catch. So you can start buying at current levels, maybe buy 50% of your expected quantity at current levels. And in case, say over the next 6 months, if there is any major correction which happens and the stock comes closer to its 200 DMA, that's a time where you can look to deploy the additional 50%.
All right, Kunal, one more coming your way from Sudha, and this one, she's also asked you multiple stocks and wants 2 stocks in the NBFC space with an entry price. She's intending to hold the counters for the next 2 years, and the stocks are Shriram Finance, M&M Finance, Piramal Enterprises, as well as Muthoot. Out of these 4, which one do you think stands out? Which 2 stand out with a buy price?
See, I think all 4 of them are classic because, at least in terms of the charts, all 4 of them are completely different. So whether it's Shriram Finance, which has been one of the strongest stock over the last 2-3 years of the entire rally, M&M Finance, which is emerging as a very strong breakout candidate from the mid-cap end of the NBFC name, then Piramal Enterprise is something which I think has recovered quite smartly over the last 1 month or so and looks attractive for a possible stage towards the recovery or recovery of the underperformance. So, and Muthoot Finance, of course, we all know that how the gold finance stocks have done, especially the last 2-3 months. So I think all 4 of them are completely different. Very difficult to distinguish just 2 names out of them. But I would still give a slight bit of more preference towards M&M Finance because the trends over there are far more stable. The stock has confirmed a breakout, and the mid-cap end could probably be a lot more vibrant going forward. So I think that's where you can create additional alpha. And from the other 2 names, I would still believe that Piramal Enterprise, I think if it corrects back towards say 870, 850 mark, that could be a very good buy. We had a buy on Piramal Enterprise almost a couple of weeks back. It had done exceptionally well. So now I think if you're looking to buy back again or to time it, 850, 870 could be a good buying range.
Okay, Ashish, coming to you for next one. This question is from Dinesh from Nagpur, and he's holding stocks of LN Electronics, 1,000 shares at a price of 215. It's not been more than a year for this counter to be listed on stock exchanges, but since listing, it's already down 28%. Going ahead, any hopes on recovery? Ashish, this question is for you. I guess, Ashish, you're on mute.
Yes. Yeah. I'm not expecting any major recovery in this stock. I think whatever the initial euphoria related to listing of at the time of IPO is all over, and institutional investors have also exited this stock continuously. So I suggest instead of this, like you can look at IQ Electric only, which is a better name and has a sizable business. So instead of a very moderate kind of company, look for a company which is having market leadership position as well as good growth potential. So IQ is a better bet.
All right, this one is coming from Kaushik Mitra. He's writing to us from Mumbai. He wants a view on IRB Infra, Kunal. He's holding it at the levels of 28.5 rupees per share. He's saying the loss is increasing in this counter, but what should he do? Stay put with it or look to exit?
I think you can stay put with it. Largely, I think if I remember, I think IRB Infra had remained in a range of 22.5 to 31 for the last 8 to 9 months. So right now it's at a middle point of the trading for itself. So I don't see any reason why you should to panic on IRB Infra. I think many of these mid-cap names are trying to make a good comeback. So if in case of the stock say recovers, the recovery could probably take the stock back towards your cost price or at least higher than that. That could be a point where you may need to consider shifting towards some other quality large cap name from the entire sector.
Okay, Ashish, the next query is on a counter. I'm hearing the name for the first time. Just wanted to check that is this a part of your coverage list? The question is from Amit Vats from Jaipur, and he wants an advice on Jaiswal Nico Industries. He's holding 5,100 shares at a price of 24 odd rupees. Do you believe that he should stay put in this particular counter? Do you track this one?
No, unfortunately, earlier I used to track, but for last 2 3 years, I just came out of my radar also. Sorry, so I can't.
Okay, I'll give it a skip, Sharon.
All right, this one is coming from Subbu. He's writing to us from Chennai. And Subbu, we take the queries live. And yes, if like even Shrishti mentioned, if you call, we will not be able to take your call on board. So he's asking a query, Kunal, on Tanga jewelry. He's purchased about 10,000 shares at a price of 1,200 rupees per share. He wants to know what should his strategy be.
So I think at current levels of 1490, 91, you can look to start consider booking out profits over here because I think the stock has formed a bearish divergence on the daily charts where the prices have hit a higher high for themselves, but the RSI has made a significant low. That generally is not a good sign for the stock price over the near term, and we expect further correction or follow through pressure on the downside. So I think it's a good time to book out profits if you're sitting into good profits if you bought at 1200 mark.
Okay, moving on, and Ashish, coming to you for this one. The question is from Balan, and he wants to know that can he enter into methanol alloys as well as Infra? Are these names good for a fresh entry?
No, I don't think so. Again, these are good names because at this price point, even the frontline metal stocks are finding a lot of resistance and breaking their range, be it Tata Steel or JSWs or JSPLs. So the turn of methanol oils and Infra will come quite late. So my suggestion will be not to buy these stocks. If you want to remain this particular sector, then I think Shyam Steel is a better bet. At the same time, even JSPL at some decline can be added. But still, these small cap names particularly should be avoided.
All right, this one is coming from Mahalakshmi, writing to us from Hyderabad. And Kunal, I know you spoke about Axis Bank, but she has about 30 shares of Axis purchased at 891, 200 shares of HDFC Bank purchased at 1390 rupees per share. Well, Mahalakshmi wants to know whether she should look to exit Axis and look to buy IDFC First Bank. Do you think that strategy would make sense? We know that off late there have been brokerages which have come out with a negative view on IDFC First Bank.
Well, that's fine because that's part of the trend. When a stock gets into an overbought nature, there are bound to be some bit of negative reactions for the stock price. But that's what the beauty of stock market is all about. That you tend to buy the stock when they come back into an oversold territory, or especially at a point when there is a lot of negativity on the stock price. But I would still believe that the timing may not be good for making that switch. So I think Axis Bank is still ripe for a breakout. I would believe that the stock should break past about the 4-digit mark, 1,000 plus levels, pretty soon. Looking at the recent trends and the outperformance for Axis Bank, so I think that stock looks attractive. IDFC First Bank, on the other hand, in case if the stock corrects and say comes back towards 70 or 72 range, that's a very good range where you could look to start deploying. So maybe the timing is not right for this switch.
Okay, moving on, and the next question is for you, Ashish. Chandrasekhar is a medium-term investor, and he's holding shares of Hind Copper, 6,000 shares at a price of 112 rupees. Is that a hold, or he should book profits at this point?
I think Hind Copper is a better bet as far as copper is concerned. And again, this stock has shown a lot of stability in terms of the price movement compared to the peer set. Though there are concerns related to growth and all those things at macro level, at global level, political uncertainty, all those things are there. But ultimately, the prices of copper, nickel, zinc, etc., will outperform compared to what steel prices can do. So my suggestion will be to remain invested here and wait for another 20 rupees more upside, then exit.
Pratiksha is writing to us from Muscat. Similar query on IRB Infra. 800 shares holding from 28.8 rupees per share. Kunal, she's insisting that you answer her query as well, but I believe your answer will still be the same. Stay put with it, right?
Hold on to the stock. It's still trading into a range. 22.5 as a lower end of the support, and 32 approximately is the higher end of the support. So it's almost the middle point of this range. So would suggest a hold. In case if it comes closer to 28.5 or 30 levels, that's where you can take a call of maybe booking out profits and shifting towards a quality large cap name from this entire sector.
Okay, moving on, and Ashish, LRG Reddy from Telangana wants to know, can he enter into Ramakrishna Forgings at this point in time? Given the recent run-up, the stock is near to its all-time high levels as well. So going ahead, do you believe that one can enter, consider fresh investment in this one?
Yeah, I'm still okay to make fresh investment in Ramakrishna Forging again. Like they are exporting very decent quantity to US companies also, and have very good order book. So this is a stock which is going to be surely re-rated. So in fact, in this sector, I like Bharat Forge and Ramakrishna Forging both. But as a mid-cap stock, Ramakrishna Forging can give you better returns. Buy even now.
Coming from Ramamurthy writing to us from Bahrain, and he wants to know about Deepak Fertilizers. He's saying he's making a loss of approximately 24% in the holding. So he wants to know whether he should look to average it right now or look to exit the counter.
No, not to average. There's nothing significant in terms of the trend. I think for last 2-3 months, the stock has been consolidating into a range. I would suggest that wait out or hold on to it for some more time. You can either keep a stop loss of I think 540 on closing basis for Deepak Fertilizer. In case if the stock closes below those levels, that's where you can look to exit. But on the upside, I think if it comes back closer to 650, 670 mark, that's the point where you may look to start considering to exit the stock and shifting on towards quality names from the sector.
All right, so that's the take coming in on Deepak Fertilizers. But on that note, we slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. This one is coming from Gautam Bhalla and Ashish as well as Kunal. I must say that the viewer query and the stocks that he's purchased is basically a true reflection of what patience and perseverance and long-term investment means, because Gautam has had 30,000 shares of ITC. His buy price is 140.8 rupees per share. He has Indian Hotels in excess of almost 1 lakh shares at the price of 34 rupees per share. And he also has DLF, 15,000 shares at a price of 75 rupees per share. He is a super long-term investor. He's ready to hold each of these counters for the next 4 years, 5 years, or even 10 years for the matter of fact. And not IDFC First Bank, it is ITC that I spoke about. So Kunal, but he wants Kunal's view on all of these counters. And Kunal, what should his strategy be in the stocks that he's invested? DLF, ITC, Indian Hotels, and buy price, something that I have never registered.
Absolutely, Cheryl. So congratulations, of course, to the viewer for holding on to these stocks. And at a point where there was a lot of negativity which was attached towards the stock in terms of the respective sectors. So I think it's complete compliments to the viewer to hold on to these kind of names. Now, I think for all three of the names which you mentioned, ITC, DLF, I think it makes a lot of sense to continue to hold on to these stocks even at current levels. I think the sector has started to look very, very attractive. In these stocks have just started to show the first signs of a leadership, in their respective sectors. So whether it's Indian Hotels from the entire hotel space, look at the last 6 months or 1 year of price patterns for Indian Hotels. It's given a boost to the entire sector, where many of the other mid-cap names have started to recover. ITC has emerged as a very strong candidate in terms of a breakout. I think from 220 levels to now 440, 450 plus mark still looks attractive. My sense is that, say, for the next 2 to 3 years, wouldn't be surprised that ITC actually goes into the 757, 70 kind of a target range, looking at the chart patterns, and so would be the case with the likes of DLF. So would be bullish on all three of the names and would suggest to hold on.
Well, indeed, what a wealth creation over the years, and such viewers definitely set an example for the rest. But moving on, and Kunal, once again coming to you, the question is on Timken, and Kusuma from Pune wants to know, can she enter Timken at this point? She wished to stay invested for the next 3 to 6 months.
Yeah, I think it's a good price to buy the stock. It's retested the 200 DMA, bounced very marginally from those 200 DMA levels. So I think at 3,300, you can look out for a positional target just around the 3,750 mark for Timken. So you can consider buying the stock at current levels.
All right, this one is coming in from Balakrishna. He's writing to us from Chennai. He wants to know whether he should look to buy IRB Industries at current market price. Also, he already has Amritanjan, but he's suffering 10% loss in this particular counter. So it doesn't make sense to average. I'll take this query to you. Ashish, what's your take on IRB Industries? Do you think it's worth a buy at current market price?
See, Aarti is already near its 52-week low. And we have seen the stock touching 800, 900 rupees also. So in my view, worst is again over for Aarti Industries with this price point, and gradually you can start accumulating for sure. As far as Amritanjan is concerned, there's not too much discussion we have seen on this particular stock. But fundamentals are quite robust at this company. They're virtually debt-free, and product portfolio is also good. Only thing is, there's very illiquid kind of a stock. So not too much action takes place in this stock. So if you're a long-term investor, certainly there's nothing to lose, because again, pharma and FMCG stocks are performing. So Amritanjan will also join the wagon sooner or later. Fundamentally, I'm quite convinced as far as Amritanjan is concerned.
Okay, moving on, and with this we'll just kickstart taking all your queries in the rapid fire session. And Kunal, the first question is from Padma, and she is holding IDFC First as well as L&T Finance and making 15% profit on both of these. Is that a hold or sell at these points?
Hold if you're a long-term investor for both.
Okay, this one's from Rajeshwari writing to us from Chennai. Purchase BVL 50 shares at a price of 1,140 rupees per share. Can average at current levels, Kunal?
Yeah, you consider averaging at current levels.
Okay, Kunal, Vinod wants to know, can he go long on UPL and Infosys for a long-term investment horizon?
UPL I would suggest to avoid at current levels. Maybe around 725 mark is where you can look to start buying. Infosys, yes, you can consider buying at current levels.
All right, Akhil wants to know whether it's right time to enter GMR Infra right now, Ashish.
No, I'm not that bullish on GMR Infra. Very pathetic last quarterly numbers, so avoid.
Okay, Kunal, Suresh from Dubai is holding 750 shares of AU Small Finance Bank at a price of 561 rupees. Is that a hold or sell?
Definitely a hold.
Kunal, this one is coming from Rakesh Saha from West Bengal. Wants to know Syngene International, Sumitomo Chemicals for the next 5 to 10 years, but he wants your view on it.
Well, yeah, both of them look very attractive. You should consider holding on.
Sorry, Kunal, once again a query for you. PR Reddy is holding Adani Ports 200 shares at the price of 812 rupees. Hold, average or exit?
Average, but then closer to 675, a very good level to average.
All right, another one coming your way, Kunal, from Harshit from Vijayawada. 550 shares of Ease My Trip, 44 rupees per share. Continue to hold or look to exit?
Exit.
Ashish Anandya is holding almost 1,000 shares of TTK Prestige at a price of 725 rupees. Is that a hold? Because she's sitting at a small profit, so what will be your advice?
Remain invested. 800 is the level on which you can exit.
Okay, this one is coming from Devashish. He's writing to us from Bangkok, and there are a couple of stocks he's asked query on. But Kunal, let me take JK Tyres. Buy price 145 rupees per share. Should he look to book profits?
Hold on.
Okay, but with this, viewers, it's time's up on the rapid fire session and also onto the Buy Now Sell Now show. Thank you so much, Kunal and Ashish, for taking out time and helping all our viewers with their stock-related queries. But with this, viewers, it's time to wrap this edition of Buy Now Sell Now. It's a goodbye from me and the entire team who put this show together. Thank you so much for watching.